why the property market is going up during a pandemic. Now, I know a lot of people were calling for massive drops. I know that the banks were calling for drops. And then since then, months later, they have now come back and revised those drops and have now said that the property market's going to go up over the next 3 years, maybe 15%, maybe 20%, and why they went from being bearish on the property market to being more bullish on the property market. And this is why I want to tell you exactly what's going on with the property market and why this is all happening. I said before this all happened, as soon as the coronavirus happened, I told everyone that this was going to play out the way it was going to play out. And so far, everything has happened exactly as I have said. And this is why. Number one was stimulus. As soon as the coronavirus hit, I knew that they were in trouble. Economically, before the coronavirus, we were in trouble. The world was in trouble. And I knew that stimulus, printing, quantitative easing, that was all going to take place. I knew that they were going to be printing beyond measure and that they needed to print money. Now they're saying that they're printing money because they need to be helping the economy out, but really it was they're doing at the start of all of this. The coronavirus brought everything forward and amplified the situation. So if anything, it made it even worse. So it meant that we had to print more money. The government had to get into more debt. Now, the reason why they have to print money is because they had to shut the economy down in stages throughout different states and that type of thing. And when they shut that down and businesses could no longer work, we had an economic crash, basically. We had people not working. Now, it was a forced crash, though. It was a forced economic downturn. It wasn't because the barbershop didn't want to cut someone's hair or was out of business because no one wanted their hair cut. It was because that they were forced to shut down. So this is a forced thing. This isn't something that should be happening right now. However, what happened is we've had to print more money, and why the government or the central banks are printing money is because we are their workers. If they turn around and say to all of their workers, go home, we're going to have to give you some pay so that you can at least survive, and here's some money, then what actually happens is the government's going, we need to print more money because we need to get them all back to work, because if we don't get them back to work, we're not going to get our taxes, we're not going to get our stamp duties, we're not going to get all of our revenue that pays for all of the debt that we have. So it's like a vicious cycle. The more debt we get into, the more money we need to print to replace it, the more money we need to give out to the economy to spend so that we go out there and create more taxes to give to the economy. And then all of a sudden what happens is we create inflation. And what happens with the inflation? It devalues debt. It devalues everyone's debt. It devalues the government's debt. And then all of a sudden we go through the next cycle. So number one is stimulus. They're going out with a job seeker payment, job keeper payment, 5% deposit schemes. You know, you can go buy a home right now with 5% down, no stamp duty. You could get into a property for $25,000, $30,000. What happens if you remove all of the red tape on a first home buyer getting into a property and they no longer have to save $80,000 to $100,000? With $30,000, they could probably get into a property. $40,000, they could get into a property. It means more people are going to get into properties at that more affordable level. So that means an increase in demand, right? The other one is all these building grants. The same thing. If you give all these building grants, what happens to people that were thinking of building? They're going to build because they're going to get more grants. So this is what's happening. They're creating more demand by giving more free money out, more stimulus. And then we've also then got playing into account interest rates. People are going, well, I can borrow money. It's cheaper to borrow money. It's costing me less to borrow more money. So why not go buy property? So they're going out there saying, well, I'm going to go buy property. Why? Because the money in the bank's not doing anything for them. They're not getting any real interest rate on their money. They're not getting any savings rates, right? So they're going to go, you know what? Let's go buy property, because property's been a good long-term performer. It always is a hedge against inflation. In an economic downturn, everyone needs somewhere to live. And also the people that may have been in the stock market or their super have probably pulled that money out and said, you know what, maybe let's place this into a bit of property because we know that that's going to be safe long-term. So interest rates, you make money free, people will spend money. That's number two. Number three is listings. We've noticed that the listings are down because what we're seeing is there's less people that want to move through the pandemic because they don't want people walking through their house. They also psychologically think that it's a bad time to sell because we're seeing an economic downturn. So they're thinking, well, it must be a bad time to sell. So there's less people selling property. The other thing as well with listings is we're seeing that even if you are in trouble economically, even if you run a business and you can't run the business, what's the best option for you? To sell your house and to go out and start renting, or to defer your mortgage? You're probably going to defer your mortgage instead of going out there and selling your house and then renting. So we're seeing a lot less listings. And what I've found in the market with a lot of agents is a lot of people that were in the property market, a lot of people either downsize or upsize property. So they're already in the market and they're looking to do something else. But what happens if you want to sell your house to upsize, but there's nothing to upsize to? There's no good properties in the market at the time. Well, you might then sit on your hands and say, you know what, maybe I'm going to stay where I live and maybe I'm going to add an extension. Maybe I'm going to put that pool in. And all of a sudden the listings become a lot lower. However, we have much more demand from first home buyers and we have much more demand from people wanting property because interest rates are low, but the low listings are creating the demand. So the supply and demand right now is out. We're seeing a lot less supply and we're seeing a lot more demand for the supply that is currently there. Now, number 4 is easing of lending. So they're already starting to come out now and say, you know what, we need to get the economy moving again. We need to get people paying their stamp duties. We need to get people paying their taxes so that they can pay all the debt back. So how are they going to do that? They're going to give credit. They're going to go, let's make it easier for people to borrow more money. And if you can borrow more money, what happens? It's like saying, you walked out to your front yard, you had a $400,000 loan, and all of a sudden you walk out your front yard and you go, geez, I got a $500,000 check in the mail. I can pay my house off. But then everyone else gets that as well. Now all of a sudden everyone's competing with the $500,000 for the properties. They've all got more money to spend. The exact same way with easing of lending, what happens is if you give me more money, I will equally spend more money, and it means that instead of going to buy a $500,000 house, I might go buy a $700,000 house or a $650,000. And the people that couldn't borrow before because they were restricting the lending for people borrowing, they were going through their expenses and there was a lot less people that could borrow money over the last, say, 2 to 3 years. If we ease that now, what's going to happen is people are going to go, okay, well, I couldn't borrow last year, but now I'm back in the game. I can borrow now because the lending criteria have become a lot easier, and all of a sudden credit's becoming easy to go by. So if we create more credit, what we're doing is creating more money in the supply, in the economy. We're creating the money supply. So we're increasing the money supply as such. And if we increase the money supply, there's more money to go around to go out there and buy assets with and buy property. And if you're at the auction and you're competing and you've got more money because they're lending you more money, but the guy next to you also has more money because they're lending him more money, what happens? Property prices go up. And the last one would be saving, right? So savings is also going up. So why savings is going up is because people that were going to go on the Europe trip, that were going to spend $30,000, aren't spending the $30,000. There was people that were going to, go on holidays interstate. They aren't doing that. They might, go out to dinner a lot more for a period of time. They weren't doing that. So what we actually saw was savings levels go up. We're seeing lending getting easier. We're seeing lower listings but more demand, and we're seeing more stimulus to buy the same houses. So this is why it's going up. You've got to look at not just, all the doom and gloom or whatever it is on the media. You've got to look at what is actually happening at play to where the property market's going to go. So what's going to happen at the end of all this? Inflation. Long term, there's going to be inflation. Why there'll be inflation? Because if you're saving money, you're basically creating a deflation environment. You're putting money in your pocket. You put money in your pocket long enough, what are they going to do? Make money free. They're going to make money easier to come by. Why? Because they want you to spend money. So then you start spending money, and then all of a sudden you spend the money that they've created, and they've expanded the money supply, and they're easing up on credit. So if you go get a loan that never was there before, you've created money out of thin air. So if you go buy a $500,000 house, you only have $100,000. You now created in the Australian economy, you've now created another $400,000. So all of a sudden we're having more money, the money supply is increasing, and therefore we're going to see over the next decade higher inflation. The higher inflation is going to devalue everyone's debt that's in property already. It's going to wipe out the savers, unfortunately, but it's going to devalue the debt and it's going to increase asset prices. So this is what's going to be happening over the next 5 and 10 years. The next 3 years in the property market are going to be good. We might see the next 6 to 12 months where it's slowly going up, but we're going to see this play out, the inflation of all assets over the next 5 to 10 years. And this is one of the reasons, or these are the reasons why this is playing out. If you like my videos, like, share, and comment. And until next time, guys, have a great day.